From Forex Traders Daily, this is your daily analysis with Ross Mullins, live from Richmond, Virginia.
Hello everyone, this is today's video analysis for October 17, 2017. Today we're going to take a look at the USDCAD, the US dollar, versus the Canadian dollar for today's trade analysis. We're starting here on the daily time frame. The first obvious indicator here, of course, is the long-term downtrend that this currency pair has been in. Going to the top of the black trend line, we're back in May of 2017, and a significant downtrend all the way down to the bottom of the chart into the mid 1.2000s. During that downtrend, there was not really a significant retracement except for this little move right here from the blue box, bottom of the blue box back in July of this year, back into August. From July to August, we saw a little bit of a pullback, but then it just turned around and made a new low. However, since making that low, we have had a significant turnaround for this currency pair. It has moved all the way from back in early part of September. It's been moving up ever since, pushing all the way into the 1.2600 level. So a significant rally or return higher here for the dollar CAD since making that long-term downtrend. We are now challenging the black trend line. The black trend line, of course, capping the last two resistance highs here at the top of the trend, top of the black trend line, and that's challenging that now. So that's very interesting for our day today. So let's go ahead and zoom it in a little bit here and begin looking at this a little bit deeper. You can see that over the past couple of weeks, we've seen a challenge of the 126 level, the pink shaded area and the black trend line. It dipped down to the orange zone, and now here we are challenging once again. There's this area that we've been studying inside the black box, support at the orange zone, kind of a midpoint or hinge point, if you will, in the green zone, and resistance at the pink zone. Obviously, the best time to buy this currency pair, if you're going to buy the direction of this rise, and let's go ahead and put another trend line here, and let me make it a different color from all the other trend lines that are on the chart. Let's make it a blue trend line. I'm going to make it a little less thick here. So the blue trend line representing the rising action or rising price action that we've seen over the past several weeks. If it's going to continue in that direction, we would prefer, of course, to buy down here closer to the orange zone. The next opportunity to go long or buy would be the breakout above the green zone being that hinge point or midpoint within our range, the little black box that we see here on the chart. 1.2505, 1.2535 is that green zone. We also have some Fibonacci, both of the red trend lines. I've drawn Fibonacci on both of those red trend lines, and you can see Fibonacci on the top of the green zone, 1.2534, 1.2504, that's the bottom of the green zone, Fibonacci. There's also Fibonacci of those two trend ranges sitting at 126 and 126.30. That's the pink shaded area. So we can tell, even just using Fibonacci, that if we can stay above the green zone, the pink zone becomes a target. And of course, if it breaks the pink zone, and the green zone, of course, we're breaking the black trend line, and we could be looking for the market to move towards the 100 period moving average, which is into the 127 level. All of that changes, of course, if it stays under the black trend line, gets back under the green zone, 2505. We'd look for the orange zone, 124.40, 24.10. The orange zone also having Fibonacci aligning with it as support, and of course, a breakdown of that support, we look for it to go lower. So the main thing is we want to focus in on these three areas, pink, green, and orange, for our trading opportunities. Forex Black Book right now is indicating a more bullish than bearish, more bullish being green, bias to the current momentum that the USCAD has. So what we're looking at, if we're going to trade the direction of our current momentum, the blue trend line, we're looking for a breakout of the black trend line, green zone, to go long. And now if you're looking to trade the black trend line and a short, then of course this becomes an area to look for resistance and reversal. Let's take it down to the 4-hour time frame. So here we are. Let me zoom out a little bit. There's that same black box, the orange zone, the green zone, the pink zone. We've already discussed those. Take a look at what's been happening. Let me zoom in one more time. Over the past several days, or a couple of days, we have been just capping out 1.2535 with no significant breakout. When I'm talking about a breakout above a zone or below a zone, but in this case above the green zone, I'm typically looking for a singular candle body that breaks out, opens and closes above that area. I want to see a full candle body above the green zone. If I do, and of course that would coincide with the black trend line and some of the Fibonacci we've seen from the history, then I have greater confidence that it's going to continue to go up. If it doesn't and suddenly gives us a bearish move, then we have greater confidence that it's going to go down. So right now we need one of these two things to happen. Either a sudden bearish move back under the green zone to tell us it's going to go back down, or a breakout 25.35 open and close above it to continue going higher for the USCAD today.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.